40% of your money in gold, GLD and GDX. Why do you like it so much, and where to from here?
So I think it should be very clear whether you're a fundamental or technical analyst in regards to gold, is that has been the strongest bull market, and it started last year. And there's two main catalysts for that. Number one is it's extremely under-owned. When we review portfolios as we acquire new clients each month, we notice that there's very little gold exposure that retail investors have. And then the other component is the fact that we think we're going to be in this very uncertain time period that's going to continue to cause gold to thrive. And so it's done really well. It works as a great hedge. It works in bull and bear market right now. It beat the S&P last year, and it's had it up 30% this year. So what we did is we bought more gold on May the 1st. We bought the position that we sold on the 22nd of April, and we grossed it up another 5% because it had a 6% correction. The gold miners had a 10% correction, and we think that trend is going to continue to be bullish. And lastly, in these days that have had big down days, where our portfolios have stayed steady because of our large concentration in a bullish sector, it's allowed us to take cash and buy some equities that have gotten beaten up to position for what we think will be a run-up post-Fed.
Do you ever buy physical gold, like gold coins? Ever do that?
We have clients that have bought gold coins on their own. We do not do that for clients right now, but I think gold structurally, with bonds being a bad place to be for the last 3 years, you're going to see more and more people taking money from bonds and going into gold just like we did, and it's been a home run so far, thankfully.
Eddie, is this market all about tariffs and or tax cuts and or deregulation? Is that what everybody's concentrating on, those three issues?
They are really concentrating on that. And I think the biggest thing in regards to the tariffs is what type of slowdown it's going to cause in the next 3 months and what type of earnings revisions that we're going to see. I don't think anyone doubts the fact that we will get trade deals. The narrative has turned more positive. But at some point in time, this market is going to want to see what the data actually does. So as though we've gotten more bullish here over the last month or two, we've told clients that these things that we're buying, if it could trigger sells in the next 2 to 3 months. So this is not going to be an easy market to get through. But I think once we get through this fourth quarter next year, we're going to be really, really in a good spot. But this is going to be a really difficult time period to risk manage for many clients.
The president keeps teasing big, beautiful deals still to come any day now. It almost puts a floor under the market, doesn't it?
It does. And look, these volatility, I expect to potentially see some tweets today from President Trump when Powell doesn't cut interest rates.
Yep.
And that could cause some volatility. And we would buy that volatility. We are ready to buy today if we get a downdraft based on what Powell says.
Got it. Eddie Ghabour, thanks very much indeed.